and welcome to today's Thursday Business Tip. So we're continuing the series on doing income taxes, and today we are going to talk about expenses. There goes my little one. So this is one of the biggest things. This is where I see people make the most mistakes. So we're going to go over cost of goods sold first. And I really want you to get a good understanding of that. And then we will dig into the expenses themselves. All right, so cost of goods sold really is something that you should use if you're making anything, any kind of product, homemade products, if you're manufacturing products, if you take something. Let's take an example. If you buy a sign and you add a bow to it and you sell that, that cost needs to go through your cost of goods sold. So cost of goods sold is used, and it is the second section on Schedule C. So on Schedule C, the first section is your income and all the different types of income you have. And the second section is your cost of goods sold. So that is your initial amount that you're going to be writing off. And the reason that they split it up is because cost of goods sold is really expenses that are directly related to making your product that you need in order to sell it. So they consider that to be a direct expense. Okay, it's one of the few expenses that you have that is a direct expense. So let's talk about what goes in cost of goods sold. So when you make purchases throughout the year for your supplies, whether those supplies are, so whether that supply is a wreath that's already made and you change and sell it, or if it's sugar that you buy in order to make sugar scrub, different products, all of that is needs to go in your purchases. So you add up all of your purchases for the entire year and you put that on your purchases, and then you need to take the inventory of everything that you have that is ready for sale. So really, when you're a small business, you have to be very careful at the end of the year to make sure you take a good inventory. So inventory is only for finished product. You don't really want to count, individual rolls of mesh or a thing of sugar unless you are a really big business. If you're not a really big business, then just count the finished goods. That is well within IRS guidelines, and that's what you really need to do. So what you need to do is you take the sale value, and you add all those up and you put that in as your inventory. So the way cost of goods sold works is it takes your purchases, it subtracts out your inventory, and what's left over is your cost of goods sold. That's the amount that you can use in order to write off against your sales. Okay, so there's other few things that you can put in cost of goods sold if you used labor that was directly related to getting those cost of goods sold. That means if you have employees who are working directly on that. So let's say a friend of mine has a business where she paints jars. If she hired somebody to paint those jars, then guess what? That would go in that cost of goods sold. If she has employees to do anything else that's not related to that product, that wouldn't go there. So it's only direct expenses, the expenses that you use to directly manufacture your product. Okay, so that's cost of goods sold. Okay, so the next big item on your Schedule C is going to be vehicle expenses. Okay, and this is where I see people really get in trouble. So absolutely, you can use your vehicle for your business. However, You have to be very careful. First of all, you better have personal mileage use as well as business mileage use. If you're putting on there that you are only driving for your business and nothing else, red flag. That is going to be a red flag to the IRS, because they know good and well that if you have a vehicle, you're using it to go to the grocery store, to go shopping, to go out to dinner. Guess what? That's personal use. Don't get in trouble because you are recording all of your mileage saying it's business. You better be very careful. If you are going to use mileage, and hey, you should, if you are using it specifically for business, then what you need is you need to have a written record. You can use an Excel spreadsheet, that is fine. You can use an app on your phone, that is fine. But you need to have your beginning odometer reading, the amount of miles on your car, before you go on the trip and after the trip, and you better record what the purpose of the trip was. So actually, we can take an example of a client I had in the past. So he had a bunch of rental homes, and so he would record the miles between the rental homes when he was going to check on it. If he was going to repair something, if he went to check on it, absolutely those were recordable. He would put the address and what he did while he was there. Let's take an example of going to one of the trainings that I go to. So if I go to a training, I would record the beginning and ending odometer on my car, and then I would put trip to Dallas, Texas for the Dallas market, to learn trends for upcoming colors or whatever. So that's the kind of detail that you want to have. You don't use mileage. So let's say that you have a store and you drive from your home to your store. That mileage, not acceptable. You cannot use going to your place of business as mileage. It has to be outside of ordinary business. So if you had a store and you were going to deliver items to someone who purchased something, yeah, you can use that mileage. But you can't use the mileage just driving to your store. Okay, so it's the same thing with the job, right? You can't, you don't get to take mileage on driving to your job. So just keep that in mind. Be very careful on your car usage, and you need to be careful how you elect to use your car. So there's two different methods you can use when you are writing off mileage. You can write off the actual expenses on your car, or you can write off mileage. My opinion, write off the mileage. It is hard to switch back and forth between the methods. They don't like you to do that. You really need to pick one and stick with it. You will get more bang for your buck if you use the mileage method. So all that means is you put the amount of mileage that you have driven. Business mileage, you need to put both, personal and business. It's only going to calculate on the business. But that's how you show the IRS, yes, I drove my car more than just for business, because they don't like that. It already kind of has a little bit of depreciation in there for your car, so that is all part of that mileage calculation. It also really kind of takes into account expenses, so you can't, if you had to get a new engine in your car, you can't use that and mileage. And be very careful about switching back and forth between the years, because that is also a red flag. You don't want to, just because you had to replace your engine this year, you don't want to suddenly switch from using the mileage method back to the actual method. So there are certain things that the IRS just disallows you to do, and it's just a good idea not to use that. Another thing that you want to make sure that you're doing related to your vehicle is recording what you get when you get your oil changes. So that also helps kind of corroborate what you have written as far as how many miles you have put on your car. And you know what? If you have, you keep the receipt. You can show it on your credit card statement where you went and had your car serviced. So if you go to Firestone, it's not like you can go to Firestone and buy things that are personal. I mean, it's really related to your car. So you really want to have some records related to that just to make sure that you can use that to help prove that you know, if you're driving 5,000 miles a month for your business, then guess what? You should be getting your oil changed pretty often. So that just kind of helps prove to the IRS, hey, yes, I really was driving that much. Okay, so we've gone through the first 3 sections. Wait a minute. So we've gone through the first 5 sections of the Schedule C. And in the next video, we are going to go through these specific expenses that you can take off and some of the red flags that are in those sections. So thank you so much for watching, and remember, if you're looking for guidance, if you need help with your business, make sure to check out my business group, The Success Path. I have a great group of people. We do question and answer sessions twice a week, as well as training. I do very specific training on how to make sure that you are compliant and how to make sure that your income and expenses are correct. And of course, also social media and how I have made a successful business for myself. So I will see you again in the next video, and have a wonderful day. Bye-bye.